Hi everyone and welcome to my morning report analysis videos with me, Richard Perry, market analyst at Hantec Markets on Tuesday 31st of October. We've got basically markets that are consolidating today. You've got a lot of major data and economic announcements, central banks and political events that are going to be driving sentiment in the back end of this week. So seems to be that traders are keeping their powder dry to a certain extent. You've also got Reformation Day in Germany, which is sort of meaning that markets are fairly flat in terms of equities. Now, what we have seen in the last couple of days is the dollar falling away. That dollar has corrected back. A couple of factors coming through that. Look at that sharp fall in the Treasury yield on the 10-year, back from 2.477 back by 10 basis points lower. Now that is interesting because that's come on the back of not only the suggestion that Donald Trump's going to be going for Jerome Powell as his choice of Fed chair, but also the fact that we've got in the last 24 hours the announcement that Robert Mueller is going to be sort of indicting one of President Trump's campaign managers into the investigation into the Russian involvement in the US election last year. So that has hit sentiment for the dollar as well. But also another factor, again, tax reform is on the agenda, and suggestions that perhaps tax reform or the sort of tax cuts could be sort of phased in over coming years, and that has also hit the dollar. But it's interesting that we've had a slight sort of settling down of the dollar today. You can see on the 10-year just pulling a little bit higher, as on the 2-year, and also on the dollar itself, and that's coming with the euro slightly weaker, sterling flat, yen basically flat now. So markets are fairly settled today, nothing too significant in terms of direction, and we're sort of looking out more to the big major risk events towards the end of the week, really, which could have a significant factor in terms of market direction. In terms of what we've got to look forward to today, there is a fairly large amount of data actually today. Starting off with the overnight we've had the BOJ. No movement on the BOJ on rates, minus 0.1% on the rates decision there, and also the continued yield curve control of targeting 0% on the 10-year. It did bring in its inflation target, but it just dragged it back slightly in the 2017-2018 to 0.8%, down from 1.1%, and there's been very limited impact on the yen, but the Bank of Japan wasn't expected to do anything really anyway. In terms of European data, look at that. You've got Eurozone in flash inflation and also GDP today. Inflation expected to come in at 1.5% on the headline and 1.2% on the core. Now that's interesting because what we have seen is German inflation yesterday disappointed to the downside. So could those readings miss to the downside? It is possible. We're also expected to see GDP on a quarter-on-quarter basis coming at plus 0.5%, down from plus 0.6% for Q2. And then we go into the US data this afternoon, which starts at 12:30 with the employment cost index expected to improve slightly to 0.7% from 0.5%. So that would suggest sort of employment costs going up in the States. Again, that could be due to wage pressures, so that would be a factor through to inflation potentially. The Case-Shiller House Price Index expected now to come in at 6.0 actually, which is a slight improvement from 5.8 last month. Consumer confidence at 121, that's back higher again. That would be the highest since April. Very strong numbers on consumer confidence for the States. That's at 2 o'clock this afternoon. So fairly large amount of data this afternoon. Now my chart of the day is the euro sterling. Now what we have had on euro sterling is a drop away. We had the ECB last week, disappointing I suppose you could say for the euro bulls with that dovish taper. But the euro sterling has broken the key support near term at 88.55, and that's sort of arguably a little top pattern that was completed and sort of continues to go down. But look at this blue line here, this dotted blue line is the long-term uptrend on euro sterling, which which dates back to Q4, about November 2015. That long-term uptrend comes in, and that's now being broken. And the market is starting to sort of drop away. You see the momentum indicators turning lower. You see crossover sell signal on the MACD lines. Stochastics in negative configuration as well. A test of 8740 seems to be the market move now, and that is a key level over the last few months, isn't it? That's held on several occasions in July and September, and it would suggest that perhaps the market is under pressure, and it's going to be sort of coming back to test that level, and that is a key support that would be a big top pattern if it were to complete on the downside. So that is a key support that could now come under threat in the coming days. Now obviously we've got the Bank of England, which is going to have a big impact I think on sterling, so there's going to be a degree of volatility, certainly you would say, but in front of that you see the technicals which are beginning to deteriorate and drop away. So selling into strength on the hourly chart, where you can see succession of lower highs and lower lows, falling moving averages, momentum indicators negatively configured, RSI on the hourly failing around 50 to 60 area, MACD lines failing underneath neutral, stochastics also sort of dropping back at lower levels. So it all sort of points towards a correction back towards 87.40 near term. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.